You are looking for a great stock market strategy, a systematic trading approach for stock market indices like the S&P 500, the Dow, and the NASDAQ. And you are sick of peak trading research only sharing commodity trading strategies like crude oil and heating oil and sugar and cattle. Well, you are in luck, because to celebrate our 10,000 subscribers on YouTube, we're not just going to go through a good equity market trading strategy, we're going to go through the best equity market trading strategy. This is a strategy that if you are a professional systematic trader, you likely already trade a version of, and if you are a beginner, you need to know about as the foundation upon which you can build some really great stock market trading systems. So a great stock market index trading strategy, let's get into it. Hi everyone, it's Dave Whitcomb from Peak Trading Research, and I want to say a big thank you to all 10,000 of our YouTube subscribers. Whether you are new to this channel or you've been subscribing since we first started the channel a little over a year ago, I want to say thank you for subscribing, thank you for your comments, thank you for your likes. Everything is helping this channel grow. This channel will continue to be the only YouTube channel that is sharing with you real, fully coded, systematic trading strategies month after month after month. And on that note, for our January 2023 strategy of the month, we're going to be going through a fully coded equity market index trading strategy. Now, this is a very simple trading system that first appeared in the Larry Connors and Cesar Alvarez book, Short-Term Trading Strategies That Work. And the system relies on 3 simple rules. Rule number 1, we have to be in a bull market. We'll define that as saying futures prices, in this case equity index prices, have to be above their 200-day moving average. For the second rule, the relative strength index, the RSI for that market, needs to be below a certain threshold. Momentum needs to be pointing downward because we're going to be buying the dip. And for our third rule, we're going to exit the position that we've bought when the price gets above a certain moving average. So overall, this is a very simple trading approach. We need to be in a bull market, we need to buy the dip, and we need to exit that position when momentum recovers upwards. And as we always do with these strategies of the month, let's look at the full system code written in the easy language coding language. So you have access to the full code logic for your analysis. You can even automate this trading system in an automated trading platform like TradeStation or multi-charts. If we jump into the TradeStation trading platform, we can look at a performance report for this strategy. There's a nice upward sloping equity curve. This trading system has made about $100,000 since the end of 2009 on just one contract of S&P 500 mini futures. And there is the full system strategy code for this RSI buying strategy. You can see that after we define a few inputs and variables for our RSI value, our moving average, and our exit moving average, this strategy is very straightforward. In fact, it's only 3 lines of strategy code. And if we break this strategy down, we can add a few comments to show that this strategy follows the very simple rules that we outlined earlier. First, if we're in a bull market, so if the close is greater than the 200-day moving average and the market is dipping, so if the RSI value is below a certain threshold and the close is below a certain moving average, then we are going to be going long stock market index futures, right? We're going to be buying the next bar at the market open. Now, we want to exit the position that we've entered if the market starts recovering. So if the close of the market gets above that moving average, then we want to sell the next bar at open to exit that position. There's also a very simple stop loss of $4,000 per contract. But again, overall, this is a very simple trading strategy. And of course, one of the advantages of this being a systematic trading strategy that we've fully coded is that we can add it to a chart. We can see on the chart how the system acts, and we can also look back at those profit statistics statistics to see what we could expect from this system going forward if it were to keep performing well in real time. There is our simple RSI buying strategy on an S&P mini daily bar chart, and we can see what this strategy is doing, especially because we've added 2 studies here for the 200-day moving average and also the RSI indicator. So when we're in a bull market, when we are above the 200-day moving average, this trading system will buy dips as defined by a low RSI value. You can see what it's doing. The RSI drops, the system goes long, and then it exits that long position when we've recovered higher in price. And because we are still in a bear market as we're entering 2023, it's worth noting that we're below the 200-day moving average. So this trading system is currently not taking any new trades. And if we jump back into a strategy performance report, again, we see that nice upward sloping equity curve. This strategy has made a total profit of about $100,000 per contract of S&P minis traded, with a nice profit factor over 2. So overall, this is a really great stock market index trading system. It's simple to explain. It's just 3 lines of code, and it's consistent with what we know about stock markets. Over longer periods, they tend to go up. So a strategy that is long only and buys dips when we're in a bull market makes a lot of sense. And this buy the dip approach to trading stock indices not only works for the S&P 500, it also works for other major indices like the NASDAQ and the Dow. Now, we've intentionally kept this code very simple to keep it in line with the original script from Larry Connors and Cesar Alvarez, but there is certainly a lot more you could do to improve upon this strategy foundation. You could use some entry filters or some different exits, or you could better define what you consider a bull market regime. For example, instead of just on top of the 200-day moving average, maybe you use the 210s treasury curve or the VIX curve. There's a lot you could do to improve this strategy, but as a foundation, this is a great start upon which you can build better equity market indices strategies. So let me know in the comments below, is there anything you would do to improve this strategy? Do you have an even better equity index strategy? Are there other markets that you'd like to see for our future strategies of the month? The YouTube algorithm really loves comments, so it helps our channel a lot. And as always, don't forget to like and subscribe. If you haven't already, you can join our 10,000 other YouTube subscribers. Good luck trading those stock market indices, and we'll see you soon.